Good morning, Top Gun options traders and investors. Whiz here with your Tuesday market SITREP, and we continue day two of our ginormous week of earnings and economic reports. This morning at 9 a.m., we're going to get the S&P Case-Shiller 20-City Composite Index. We're going to get Chicago PMI at 9:45, and then the Conference Board's consumer confidence numbers at 10 a.m. But the biggest really the two biggest things, there's three huge things going on this week. The two-day Federal Reserve meeting, and that ends Wednesday, and we'll get an FOMC statement. We already know what the rates are going to be. They've already told us what they're going to be probably for the rest of my lifetime. But just their wording about when they're maybe kind of sort of thinking about ending this QE infinity, so to speak, that is what the markets are going to be looking for. But the second biggest thing this week is going to be what is going to happen when the ECB meets on Thursday. Is the ECB going to cut rates? And it might be a little more likely now because a report came out yesterday with Eurozone inflation eased to about 1.2% in April, and that's the lowest since February of 2010. There's just some bad stuff going on. I'm getting ready for our primary live trade brief this morning at 0900, good hour and a half, 2-hour live trading session with our $100,000 primary live trade brief model portfolio that I manage, and we're going to talk about all this stuff. But my traders know how bad it is really in Europe. There's nearly 60% of Greeks under the age of 25 are unemployed, and about 56% of Spanish around that age group are out of work as well. It's not going well over in Europe, and even Christine Lagarde, the head of the IMF, is kind of poking Mario Draghi, the president of the ECB, to lower rates to try and spur economic growth. I got to tell you, she and a lot of people over in Europe are really looking at what the United States is doing with QE infinity and what it's done to the stock market and quote-unquote the wealth effect, right? And they're also taking a look at Japan. Japan has copy and pasted what we're doing, and of course, being the arrogant Americans that we are, we're giving the Japanese grief for what they're doing, but they're printing yen out of the back of their Toyotas. Their central bank is doing what our central bank's doing, and it's working out great for us. While the underlying Japanese economy is horrible, it doesn't matter. The stock market's reacting the way our stock market's reacting. The underlying pinnings of our economy aren't that great, folks. But look at this trade on the EWJ. It's the iShares Japanese ETF, $3,300 profit. That is a 203% gain in 2 weeks on this ETF and this trade. It's a synthetic stock position. This position acts as if we own this ETF, but we got it for a lot cheaper. But over 200% return in a couple weeks, based on what the Japanese are doing. And a picture's worth 1,000 words here. Looks familiar? You say we can't fight the Fed. Well, we can't fight the Japanese Fed either, even though, and as you guys know, because you watch my SITREP or my Monday morning outlooks or Friday market wrap-ups, you know that you can't fight the Fed. And even though things might be bad, you know that the economy and the market are completely disconnected. They're not even in the same universe right now, folks. That doesn't go on forever. Eventually, the market and the economy have to be somewhat in the same room, but that's not right now. So a lot of these trades, I call these hold your nose trades. So, we're going to make money off the stupidity of others. That's my motto. I don't care what's going on. As long as the music's going on, I'll be going around in a circle. When it stops, trust me, I'm going to have a chair because I'm hedged, whether it's through the VIX or the SDS or different positions in my various portfolios. I run an absolutely hedged ship, so to speak, because I know this music is going to stop and it's not going to go on forever. Okay? Again, the Fed meeting, the ECB meeting on Thursday is only going to be sideshowed by what's going on Friday, which is our unemployment rate. Obviously, non-farm payroll, and then our unemployment rate, and we all know that it went down last time, and unlike the first couple years of the Obama administration, when they didn't understand the unemployment rate going down might be a bad thing, they used to race out to the microphone, remember this, and go, hey, unemployment went down. What we're doing is working. Until somebody with half a brain would tug on their sleeve and go, an hour into it, go, get off the air. It's actually bad news. Now you notice they don't have have any press conferences when the unemployment rate goes down, right? They send out a couple of their underlings to say, well, we still have a lot to do. Yeah, we do. And the Fed's kamikaze mission that they're on, there is no plan B. The Bernanke's going to print money until unemployment goes down, but unemployment is currently going down for all the wrong reasons. So we're going to see an interesting week this week in the market. Obviously, we saw a little bit of a rip-your-face-off rally yesterday. Apple really caught a bid. Let's take a look at Apple. Just had an absolutely ginormous day. Why? Well, they're going to be issuing debt for the first time ever in their history, right? So the stock kind of popped and then leveled off. Why? Because we're going to be giving a little bit more money back to the shareholders type of thing. We're going to actually take on some debt. The most cash-rich, this company could loan money to God. They're sitting on so much cash. It depends on who you talk to and where it's stored and everything like that. Let's just say they have enough to loan money to God, and they're in this low-rate interest environment looking to take on some debt, so they can either build a time machine or give money back to their shareholders. So Apple caught a bit of a bid today, but I got to tell you, again, a picture's worth 1,000 words. Everybody thought the bottom was in Apple here, and here. This would be the definition of a falling knife, and I don't want to catch it and try and pick a bottom. If you trade with me, you know that I think it's over with for Apple. I think it sees 350 before it sees 550. I don't think it's over with long term, but short term, I do. Margins are under pressure with all the handset makers, and they really have to come out with the next big thing. I think Apple's trading sideways until the fall anyway, because they said it on their earnings call. They're not going to be coming out with anything really cool until the fall. So kind of a layup trade. We're going to be talking about that this morning in our primary live trade brief, which I have to get ready for. So I'll let you guys go, and I'll be back with Wednesday's market sit rep tomorrow. Have a great day. We'll see you.